All right, guys, today we're talking Cumulative Volume Delta, or CVD. It is a free tool that can be grabbed off of coinalyze.net, and it can give you an idea of where price may go next. See, retail teaches you to draw triangles like this. Oh, that's not a triangle. Triangles like this. I mean, that's an ugly triangle, but you get the point. Based on the breakout and then take your positions. But, 95% of retail loses. So why would you learn from them? Doesn't make any sense. On this channel, we talk about following the money because the market is moved by money, not geometry. How can we follow the money? Using something called CVD. So guys, I want you to go to coinalyze.net, okay? Come over here on the top, coinalyze.net. Under indicators, I want you to type in CVD. You're going to get this one here, which is this middle one. And then you're going to type in OI, which is open interest, which is this bottom one here. Once you have both of those indicators, your screen will look something like mine. Mine looks better because it's black and white. Yours is ugly. Okay. First things first, what is CVD? What does it mean? Cumulative Volume Delta. Now, I don't want you guys to focus on these numbers on the right because it doesn't matter. CVD is relative to its previous point in time. Okay? What I mean by that is CVD here was lower than CVD here. That's what we care about. We don't care about what the numbers are. Doesn't matter. CVD is increasing over time in this little section here. Okay? What does it mean when CVD is increasing? Well, CVD is essentially, how many times can I say CVD in one video? CVD is essentially the positions that are being opened in the market. If they are increasing over time, then that means long positions are entering the market. If they are decreasing over time, that means short positions are entering the market. Okay? So when we look at the price, we can look at CVD relative to the price action. Now, to make it a little bit juicier for you, we have something called open interest. Open interest, similar to CVD, we don't care about the numbers on the right. What we care about is its previous point in time. So from this peak, open interest has been decreasing over time. What does that mean? Open interest is the commitment of traders. Okay? It's the commitment of traders. If open interest over time is increasing, then that means more traders or new positions are opening. Okay? New positions are opening if open interest is increasing, and positions are closing. So not new positions if open interest is decreasing. Okay, stay with me here. I know that was a lot. I'm going to go over it really quick. So CVD is the direction of whether the market is longing or shorting, essentially. When it's increasing, people are longing. When it's decreasing, people are shorting. Open interest is new positions versus closing positions. If open interest is coming down, positions are closing. If open interest is coming up, positions are opening. Okay, so let's write that down. Opening versus closing. I'm just putting it here. You guys have an idea. That is a really ugly writing. But you have an idea. So down is closing, up is opening. Okay, CVD, up is longing. Longing, and when it's coming down, they are shorting. Okay, now how can we use this relative to the market? Like, what does this all mean, Gio? Teach us, please. Guys, I'm getting to it, okay? Have some patience. All right. First thing I want you to look at is their relation to each other. So forget the price right now. We're going to forget the top. It doesn't matter, right? If CVD is increasing and open interest is increasing, that means longs are opening, right? That's important. Longs are opening. So new traders are longing. Okay? If CVD is decreasing and open interest is increasing like this, that just means that shorts are opening. Okay? You're with me? Shorts are opening, and then this way is longs are opening. That's how you look at it. Now, if open interest is down, is getting lower over time, then that means that positions are closing. Why would people close their positions? Well, there's a multitude of reasons. They could be taking profits at what they could consider to be a key level. They could be getting liquidated, or they could be getting stop hunted. Okay, those are the three reasons why open interest will be on the decline. Now, this is where it can kind of get confusing, but once you understand it, you'll understand it, right? If open interest is decreasing, people are closing their positions, whether it's intentional or not. So if CVD is increasing while open interest is decreasing, that means that their shorts are closing, right? So what is a closing short position? It is a long, right? When you're short and you hit your stop loss, it is a market buy. It's a market long. So if longs are entering the market, but the positions are closing, then that means that this is like people are getting stopped out or they're taking profits, but likely to be getting stopped out. I hope that made sense. I'm going to go over it one more time because this is where it can get a little bit more tricky, all right? If open interest is decreasing, right? Open interest is decreasing, then that means that positions are closing. So if CVD is increasing, right, that means that these positions that are closing their shorts to cover are closing their shorts by buying back the position. So longs are opening, but traders are closing their positions. This, in other words, is called a short squeeze, right? That's a short squeeze. If price starts to do this, then that's a short squeeze, right? I hope that made sense. I really, really hope that made sense. Alternatively, the other way, if CVD is decreasing and open interest is decreasing, then that means that traders are closing their long positions by shorting, right? Again, if you're long and market maker hits your stop loss, that is a market sell, right? You're selling at a decrease in like price, whatever. You're losing. Okay, you're not selling high, you're selling low. So shorts are entering the market, but they're not new shorts. They're closing your longs. Now, this is important. Remember, I told you to ignore the top. Now I want you to not ignore the top. Let's get rid of these. All right. So now we understand the definitions. Now there is a cheat sheet chart. My goodness, the tongue twisters in this video. There is a cheat sheet chart. I will link in the description down below so you can check it out. It's not as, in my opinion, it's a little bit more confusing than if you just write long or short. Maybe I'll make my own cheat sheet and I'll post it on YouTube for you guys. But anyways, for now, you can go look in the description. All right. Now, how does this relate to price? Okay, let's relate it to price. First of all, when price is doing nothing like it's been doing for the last week, absolutely nothing, how can we follow the money? Well, we know that the market maker's job is to peak interest, right? Without people, without you and I, without retail, without institutions committing their money, then there's no market. The market will not move. So it is the market maker's job to peak interest. That's why consolidation happens, okay? It's not because retail needs a chance to buy, or the institution needs time to buy, or supplier and demand, or the RSIs need to reset, any of that crap. No, we follow the money, okay? That's why consolidations happen. So when consolidations happen, how does the market maker peak interest, right? We're looking for this on open interest. We need up. We want it to go up. When it's moving down, that means the move is already happening, usually, okay? Or sideways is no good. We need it to start increasing. What does the market maker do to increase price? Or increase interest. He does this. He spikes up, gets traders committed to go long here, rips it back down. These traders are in negative. They're underwater. What does he do? He rips it down, spikes it down, shifts it back up, right? X amount of times until market maker has fulfilled enough positions that he wants in this zone, and then eventually shifts out. Now, obviously, I don't know what's going to happen in the future. I think it's going to go up, but we'll see. This is how and why consolidation happens. The market maker is piquing your interest. He's spiking price up and then ripping it back down, spiking price down and then bringing it back into the range over and over until he has a number of positions that he wants and he has a general direction that he wants to go in. Now, what will happen is market maker will let's just say market maker doesn't want to bring the price down after this zone, okay? He's trapped enough shorts in this zone. People are short, and now he's ready to rip the range higher, okay? Well, what will happen is whenever price comes down, market maker will absorb the shorts, okay? In order for somebody to sell, somebody has to buy. When retail sells this disgusting candle coming down, and they're stupid and they're selling a falling candle because retail teaches you an engulfing candle you're supposed to sell at the end of it. Well, look how that worked out. Who buys, right? Who is your position against? Well, it's against the market maker. So when retail sells here, market maker is buying here. And market maker is considered a whale, right? Obviously. So what happens is market maker holds price. It's essentially like an order block, right? There's an order block here. Market maker is not allowing price to come down. Now, this is relative to our CVD and our open interest. When there's consolidation, you can have a general idea of what's going on, right? Let's take a look. I'm going to remove these words so you can see it nicely. Oh, that stayed. So you can see it nicely. Okay. Now remember, we're looking for this. We want open interest to increase over time. So let's just say it was, right? Let's say it was like this right now. If CVD is increasing over time and open interest is increasing over time, what does that mean? That means more people are longing over time. Okay? More people are longing over time. Now, let's get rid of this. If more people are longing over time, price should be going up, right? If people are buying, price should go up. What happens if it's not going up? In this case, it is, but let's just say it's not. Let's say it's doing this. Or let's say it's just sideways or like a little bit down, right? Well, this is a divergence, right? If more people are longing, price should be going up. If it's not going up, that means that there's a market maker here that has limit buy or limit sells here. When he spikes price up and retail starts to buy, market maker is absorbing all those longs only to rip it down the range. Okay? This is how you follow the smart money. You don't draw stupid triangles and geometry class. The market is moved by money. The market is not moved by geometry. If you like geometry, go back to math class. Follow the money. This is how you follow the money. CVD is an amazing indicator along with open interest, and it shows you things in real time. Follow the money. All right? I know that was a lot. Go back and watch it again. Watch it 2, 3, 6, 10 times. Doesn't matter. Go back and watch it. You need to understand this concept. This is a cheat sheet. All right? We have our cheat sheet entry. This is another version. This is a solid indicator. All you got to do to win is follow the money. It's that easy. I'll do a divergences video and how you can use it to apply, how you can use it in real time and how you can use it to actually enter. You know, I'll give you a strategy based on this coinalized CVD and open interest. This video was an introduction so you can understand it. If you have any questions, come to my Discord. The link is down below. We have over 100 people in the Discord. Shouts out to everyone in the Discord right now. You guys are the best. We have a great community in there. Very welcoming. We got new traders like you if you're watching and you're new. And we have some more experienced traders as well. We're all in there. We're all talking all day long and we're helping each other all day long. We're pumping and I'm long, so I'm happy. If you like the content, please like and subscribe. Hit the notification bell. Yeah, man. I want you guys to win. Follow the money. Stop drawing triangles. Join the Discord. That's all I got for you today. Peace out.